Champions Oncology just posted the biggest revenue year in its history. $59.4 million, up 4.4%. And it went straight back into the red. The sharper number is not on the income statement. Operating cash flow swung from positive $7.4 million to negative $4.5 million, an $11.9 million reversal in 1 year. So where did the money go? 4 years and 3 lines. Revenue recovered from a down fiscal 2024 to a record now. Operating income was negative, then positive $4.6 million, and is back to negative $1.1 million. Operating cash flow does the same thing, harder. Fiscal 2025 was the only profitable year of the 4, and on this picture it looks like the outlier. Operating cash flow for fiscal 2026 was negative $4.47 million, against positive $7.39 million the year before. That $11.9 million reversal is roughly twice the operating income reversal of $5.7 million. So earnings explain about half of it. Working capital explains the rest. Quickly, what this is. Pharma and biotech companies developing cancer drugs pay Champions Oncology to run studies that predict whether a drug will work, using a bank of patient-derived tumor models, human tumors grown in immune-deficient mice. It also licenses the genomic data behind them, 214 employees, 1 reportable segment, and a public float of $28.6 million, a microcap no analyst covers. The 4.4% headline hides 3 different businesses. Pharmacology services, the lab work, grew 17.6%. Data license revenue fell 83.7%, because fiscal 2025 held 1 large deal with a single customer, and this year did not. Other revenue fell 58.5%. $6 million of high-margin license revenue was swapped for lab work that costs real money to deliver. So gross profit did not move. It stayed flat at about $28.5 million, because cost of oncology revenue went from 49.9% of sales to 52%. Here is where the loss came from, ranked by increase. Research and development, up $2.3 million, 33.1%. General and administrative, up $1.8 million. Sales and marketing, up $1.8 million. Total costs rose $8.2 million, against $2.5 million of extra revenue. And headcount barely moved. 213 people to 214. But sales and marketing went from 32 to 45, while research and lab operations fell from 159 to 149. 13 more salespeople, 10 fewer scientists, and bookings still fell. Now the real story. 1 table in the revenue note. Deferred revenue is money customers commit before the work is done. In fiscal 2025, Champions added almost $30 million of it and recognized $26.6 million, so the balance rose. This year, it added $24.1 million and recognized $30.7, and the balance fell from $15.4 million to $8.8. In cash terms, that one line went from providing $3.3 million to consuming $6.6 million, a $9.96 million swing. On its own, 84% of the entire cash reversal. Management's stated cause, in the filing, is lower bookings. The biggest thing keeping the number from being worse was accounts payable, the company paying its own suppliers more slowly. The balance sheet. Cash fell from $9.8 million to $4.9 million. Current assets sit $703,000 below current liabilities, a working capital deficit the company tags itself. There is no bank debt and no credit facility. Management does not flag going concern. It says cash plus expected operating cash flow is adequate through August 2027. On valuation, a discounted cash flow would be false precision here. Fiscal 2026 EBITDA, operating income plus depreciation, is $237,000. What is defensible is a what has to be true bridge. At the July 29th close, the stock was $5.46, about $76 million of market value and 1.2 times revenue. To restore last year's operating income at this year's gross margin takes about $11.9 million more revenue, roughly 20%. Price from stockanalysis.com, everything else from the filing. The bottom line? This record year was partly paid for by the balance sheet, and deferred revenue additions are the number to watch. And here's the wider point. No analyst covers this company, and nobody wrote this by hand. Every figure came out of the filing's own XBRL, and the same pipeline reads any of the 10,000 companies that file with the SEC. This entire analysis was built on the RoboSystems SEC Shared Repository, structured filing data for every public company that files. Revenue, earnings, balance sheet, cash flow, segment breakdowns, all queryable, all from the original XBRL. If you want to run your own deep dives like this one, the link is in the description.